In a world edging towards economic collapse and societal upheaval,
we're up against a real polycrisis.
Inflation is eating away at our savings.
A shaky banking system is putting our financial security at risk.
Government debt
is at unthinkable record highs.
And the wealth gap keeps growing thanks to an unjust monetary system.
Add in AI
and advances in longevity disrupting jobs.
A looming property crisis.
Geopolitical tensions.
And it's clear we've got our work cut out for us.
And so when I look at gold and silver, to me, they're not an investment, they're wealth. They're wealth that I really have no intentions of ever using. That presents itself when the dust settles, where I could use my dry powder in the form of gold and silver to take advantage of that. Or, God forbid, there's an emergency where I need it. But short of that, I know that I can leave it for my kids and my grandkids. And in the year 3000, long after the bills that we call money that are in our wallets are hanging from a frame in the Smithsonian as an example of what used to be, gold will have immutable wealth. And that to me is how I've always looked at gold and silver. I never, ever talked about selling or buying or holding gold and silver because the sky was falling. To me, it was wealth. And that's how I learned about it. And that's the way that I think about it.
And I looked at what the price of gold back when my son was born, 2006 until now. I mean, I don't really believe that's talked about either, is the growth of gold and how competitive it is.
People don't get it. It's outpaced. First of all, it's doubled the performance of the 10-year treasury over 25 years. It's beat the 10-year treasury over 50 years, just barely. And it's beat the performance of the S&P 500 since 2000 with dividends reinvested. Since the turn of the century, it's averaged 9.9% per year, compounding, and the S&P 500 about 9.6 with dividends reinvested. And so, January 1st, I think of 2001, it was $252 an ounce, and now we're over 2,500. It's up tenfold.
How does that work?
There's no reporting on purchases at all, ever. The only time there would be reporting would be if you paid with cash in excess of $10,000, like green cash, like this kind of cash, in excess of $10,000, or multiple money order or cashier's checks under $10,000 each. Like you could do a cashier's check for $1 million, no reporting. But if you did 1,000 checks at $9,000 each, you're going to get reporting or in cash. But it's important to understand that that's retail law in this country. Well, if you went to that welding store and you paid with $11,000 and $100 bills, they're supposed to issue you a Form 8300. If you go and buy, you go buy your whole family a new wardrobe at Nordstrom's and pay with cash, you get a Form 8300. That would be the same thing here. So, it's not just specific to precious metal. So you pay with a check or a wire or an e-check, there is zero in the form of dealer reporting. When you sell back, there are some things that trigger reporting. Let's go over them real quick. In gold, there are 3 coins and then bars. Bars in excess of 1 kilogram, 32.15 ounces in one trade, right? So if you had, 100 1-ounce gold bars, if you sell me 32, I don't need your social. You sell 33, I do. Now, in theory, you would never want to call the dealer and say, I got 100 bars and I'm not reporting any of it, so I'm going to, break it up. You don't want to say that. But you could call a dealer and say, hey, I got 32 1-ounce gold bars. I'd like to sell them. You call back a few days later. Hey, I'm going to sell another 32. You call back a few days later. I'm going to sell another 32. Legal, completely unrelated transactions. Don't tell the dealer what I don't want to know that you're trying to avoid reporting. And I just don't. And that's not you shouldn't give that onus to the dealer. Instead, if you sell under 32.15 ounces in one time in bar form, then no 1099 is filed. The coins that would trigger it on the 25th ounce, Krugerrands, Maple Leafs, and 50 pesos. That's it. Gold Krugerrands, gold Maple Leafs, and gold 50 pesos on the 25th ounce. Nothing else triggers dealer reporting, period. So here again, you could sell 24 Krugerrands today, sell 23 the next day, another 24 a few days later, 20 a couple days later. no dealer reporting. You sell more than 24 in one occasion there is. So you could sell back as many American Eagles, Buffaloes, Kangaroos, Philharmonics, pre-33, Chinese Panda. None of that stuff triggers it. So it's a very small window. In silver, it's bars or rounds, generic rounds, not the coins, bars or generic rounds in excess of 1,000 ounces in one transaction, period. So you could sell 980 today and 950 tomorrow and 700 the next day. 1,000 ounces in bar or generic round form, or 1,000 face value in pre-65 silver. So anything under that amount, not triggering it. So you can sell Maple Leafs, even silver Krugrands, not gold, but silver, old Morgan silver dollars, Philharmonics, Britannias, Kangaroos, none of that will trigger it. Just the rounds and the bars in excess of 1,000 ounces in one trade, and the junk silver in 1,000 face in one trade. That's it. And when you see a currency that is being devalued the way that ours is, the debt burden that we have, and the same throughout most of the world where countries are massively indebted, gold is beginning to, I think, be remonetized or revalued as something worth more than the currency that are used to buy it. Like you said, pay the bills, put the food on the table, pay the rent, and then put the rest into something stable. Where if your numbers are correct and mine are correct, that means India has been seeing gold appreciate roughly 15 to 20% per year, compounding over the rupee over an extended period of time. This is the real reason behind it. And then going back to what we were saying earlier, who cares about the yield if you're talking about, at least in terms of gold being a non-yielding asset, when it has this type of appreciation potential? But when we're talking about traditional assets, I guess I'm torn. I'm torn on one hand, believing that maybe they are able to ignite a market rally, a super cycle of commodities and equities that go to the moon based upon a dollar that's getting inflated away to zero. But measured against gold, it will continue to lose value. On the other hand, I do understand what you're saying, and I see the fact that we're at record, PE ratio with nothing in the way of dividend yields in a market that doesn't justify these high values, in a market that is very much overstretched. And I would just simply say caution is certainly called for. It's not something that I have any taste for right now. I would just simply say you're not finding value in the stock market right now, even a little bit, when measured against the risk. We look for the term asymmetrical risk, where what gives you the lowest downside and the best upside. And to me, equities are certainly not asymmetrical in their value. To me, they have tremendous risk for upside that, I think is not really what I'd be looking for right now. It's not about return on your money. It's about return of it in a world that is as over leveraged and undercapitalized as this one is. To me, it's a fool's errand to try and chase these gains in the stock market that is inverted, if you will, with just a very few stocks holding up the entire market.
Like you say, getting your money back to you, but in my mind too, now with all of this craziness, I'm thinking about, well, how do I get my money out of harm's way more than anything else?
That because the day that everything collapsed, do you want to tell me it's just coincidence that Robinhood, Vanguard, Fidelity, Schwab, all of them just happen to be inoperable? Sorry, there's a problem, a glitch. They all didn't work when the market fell by 1,000 points. Is that really the kind of liquidity that you want? And it's a fallacy. People think they have such amazing liquidity, but if you couldn't even access your account on all of these major platforms when it was the biggest point drop ever in the history of the Dow Jones, I mean, think about that, and then think about what our good friend Bix always talks about. You don't hold it, you don't own it. Yeah. The removal of counterparty risk. This is exactly the type of situation. I remember early on in the pandemic, I told my nephew, I said, hey, man, he had a big 401k, and Fidelity is the custodian, works for a corporation. I said, dude, just sit on the sidelines for a little bit. Let this all play out. This is unknown to all of us. No one knows what's going to happen. Sit on the sidelines. So he calls Fidelity on a Thursday, sits on hold for 2 hours, calls me back at the end of the day, said, Andy, you won't even believe what they told me, that after 2 hours, they came on the line and said, we're so overwhelmed that we have to schedule an appointment for you, and the first one is Tuesday. So when you talk about, these types of deals, the insiders will always not only be in
Yeah.
Long before everyone else. Think about the central banks buying gold the way they have for the last few years, as the American public isn't involved, and they'll be out before everyone is. Think of what these insiders have done. By the end of the second quarter, they're out. They don't care if they forego a little bit of gain. They just don't want to get whapped. And maybe that whap is coming. Certainly by those actions, it would make one think, yeah, that seems like a crumb that's pretty hard to ignore. That amount of silver that they bought in 1 month is 70 million ounces more in silver than the U.S. Mint made in silver eagle coins over the past 3 years combined. So you got India importing more silver in 1 month than the U.S. Mint has made in eagles in 3 years combined. Think about that for a moment. They are estimating that upwards ends of 7,000 tons will be imported this year. And I mean, last year it was 4,554 tons. And 560 tons the year before. So 560 jumps up to 4,554, jumps up to 7,000. Their numbers are massive. And they've imported over 700 million ounces in the last few years. That's so much more than is on COMEX and LBMA combined for delivery. It's not even funny. And that's just what they tell us. And as I mentioned to you probably last week in an interview I did with Sean Kuhn from Dolly Varden, he says, look, Andy, China's flying all around Latin America and buying up all the doré and concentrate and shipping it back to China to refine it. How many people know that China is the second largest producer of silver in the world and now buying concentrate and doré at up to twice what the West will pay for it, shipping it home and refining it so it doesn't have the transparency or affect the price settlement the way that it would coming off of an exchange? You have these countries using the brain-dead Western suppression against us, draining the exchanges, making massive deliveries across the globe, and now even disintermediating the whole system and going right to the miners and buying their doré. So it's a big deal. I mean, I don't know how much bigger of a deal than I can explain it than to say these countries are every bit as sophisticated or more so than the West. And in fact, they know what we're doing. And we've documented that on all sorts of things that they've said, like the head of the Shanghai Exchange in 2015 saying, when China's allowed to speak at the gold table, the real price will be observed. Or the BRICS Grain Exchange saying we produce more grain than the West, but we can't control the price. It's done on COMEX. That will change now with the BRICS Grain Exchange. They know what we're doing to the world's commodities. They know we're suppressing them. So instead of raising a fuss about it, they're just draining it and buying it everywhere and anywhere they can, even in unrefined form. And it goes right past the watching eye of the mainstream. It goes right past the watching eye of Wall Street. And you got to come to Liberty and Finance to find that. It's just a joke. But it elevates what we're talking about to supreme importance because you can't get out of the way of what you don't see coming. And in this case, you can't take advantage of what could be a once-in-a-generation shift unless you know it's shifting. And indeed, by the actions of these countries, it's shifting. The amount of deliveries that we are seeing is so unprecedented, it's not even funny. And it will get to a point where at some point, the exchanges that have grown to be accepted for up to 140 years, the LBMA and the COMEX in 74 will be rendered the same way Bernie Madoff was, as a scam and as a Ponzi scheme. And the Shanghai Metals Exchange, which has increased over 200% in volume in the past several months, has now surpassed in trading volume the COMEX. So these little by little moments are becoming far more legitimate, and it baffles me how underestimating this is really, how the mainstream underestimates it, how Wall Street underestimates it or completely ignores it. I think this is a massive deal, a huge deal, and all you got to do is not listen to what people are saying, but do what the biggest money in the world is doing, those who know the playbook, and that is accumulating commodities, period. Selling treasuries, selling dollars, getting out of the way of what's coming and buying commodities which have, as we know, no counterparty risk when held in your own possession. And so it's about being honorable and doing things the right way, honoring your word and honoring the integrity of your ecosystem that is now part of a bigger deal. But it's not a common currency. We're not beholden to a central bank, right, or to the Chinese or the Russians. Everyone is doing this voluntarily, and it's ultimately gold, which is the only other tier one asset in the world next to US dollars and treasuries. And it's these countries that now must be managed appropriately in order to be really demanded within the unit ecosystem.
And let me add this, and correct me if I'm wrong, but I've also read the unit and Enbridge white papers,
And as I understand it, this is a distributed but permissioned blockchain system. So it's not that anybody can set up a node and start rocking nodes and try
Right.
to overthrow with compute power and try to hack the system. Rather, the nodes are distributed like Bitcoin nodes, let's say, but they're only run by participants who have permission to run those nodes. Is that correct?
That is correct. And think about now the biggest participant, Saudi Arabia, the world's largest producer of oil in the world, who turned down a meeting to the G7 and instead went to Novograd, is now a full member of Enbridge. And so this is a big deal. It's and if you think about it, you know, this, if they were to ratify this, there's supposedly a meeting. Delma Rousseff said, in principle, we've agreed to this. And we're going to have a meeting in September in China to ratify it. And if indeed it is ratified and rolled out in October, what is the need? Here's your project Sandman. Here's the moment that I've talked about even before I knew what Sandman was, where every country in the world, and largely because of you, and I always give you credit for that, but because if every country in the world's had to own dollars for 50 years, stockpile them, giving us this synthetic demand, this exorbitant privilege of being the world reserve, if every country's had to hold them for 50 years and all of a sudden they don't, and you have a new settlement currency, and you have, instead of buying treasuries, which you can buy gold, which has doubled its performance for 25 years, but lacks that counterparty risk of central bank confiscation based upon ideology. And so in every sense of the word, it makes sense to de-dollarize. And I'm very fond of the term logarithmic decay. And this is, again, Project Sandman. Little by 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 little, they have all been de-dollarizing. Little by little by little by little, they've all been accumulating commodities. And little by little by little, they've all been selling treasuries.
Your confidence comment is very key here. Recent polling shows that 17% of the people believe that the U.S. is handling the economy and the management of the U.S. dollar well. So we're talking about a combination of Congress, your government, and the Federal Reserve. 17% of people have confidence in U.S.
Well, and those 17% have their head so far up there, you know what? They're not paying attention. And they're part of the 17% that consider themselves well-read, just read the wrong shit nonstop. And at some point, people need to wake up. I mean, it becomes aggravating as hell to me because I'm someone who thanks God every day for this country and the opportunities it's given me. But, you know, we are making some really, really detrimentally bad decisions that are going to impact this country. And like I keep saying, current administration has done more to damage this country than any external foe could have ever have done in a very short period of time. So this is a very important election. God willing that we see a change in leadership, because we're headed down a very dangerous path right now.